Hi, welcome to this video today, which is on the 11th of July. It's Sunday. This is our weekly Forex forecast. Just going to pick out some pairs which we think could offer really good risk-reward trading opportunities in the week ahead. Got plenty of pairs to look at. We'll go over the charts in just a moment. Now, over the last few weeks, generally good trading conditions and some nice trends. Now, we have been very bullish of the USD and the JPY in the crosses, and both the dollar and yen shown decent strength. I think we may see a pullback, but that pullback will be a buying opportunity. I'm also very bullish of the GBP in the crosses as well. Now, what we are going to do is we are going to go and take a look at the charts. But just before we do so, please do keep in mind, it is my view as of right now. It could, of course, change in line with the market condition and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video and you will get live access to our member center. You can also follow our Facebook page, join our Facebook group of traders, and check out our recommended regulated ECN broker. Now, I've been doing some updates in our member center this weekend, so I'm going to use the charts from there. So let's go and take a look at that. Just before we go over and take a look at the charts on our site, I've just got one of our favourite resource sites up, which is the Marketeer, which I'd recommend strongly to anyone to go and look at. And I've got a chart they posted, which is net USD positioning, and it comes from Goldman Sachs. And what we can see is three groups of speculators. This is the division between long and short. All three groups are short of the USD, particularly asset managers. This was a record short here. They covered out some shorts, then they added again. Now they're covering out. The other two groups are covering out as well. Market is just too short of the USD. In our view, more shorts will get covered, and these three groups will eventually end up long the USD. Mentioned it in previous videos. Yeah, inflation is really high in the US, inflationary pressure. And that means that the Fed will have to cut stimulus soon. And the market is not thinking that they're going to do this. They will. They'll raise the rates quicker than the market expects as well. So the market very short of the USD. We're looking for more shorts to get covered out. Okay. Now, if we go to our first pair, which is going to be Euro USD, we've been holding a short position for a good few weeks. I see no reason to change our stance. So we got a lucky entry at 122.20 up here. We roll over, little bit of a rally, down, little bit of a rally, despite the big fall. Yeah, speculators still remain pretty long and bullish of the euro. That points to limited upside and a lot of downside in our view. In terms of where we are here, I think we'll probably try and take out the 119 level. If we do, just sell back through the level. If we don't, just sell weakness back through the previous high, going to 117, then weekly support at 116, then 114. So really looking for over 400 pips more on the downside. The big fundamentals are just out and out euro bearish. Okay. In terms of if we break out, I said sell back through 119, okay? Our stop is at 119.50. That's close just to lock in some profit, okay? But if we were taken out, we'd sell back through 119 into the big 120 level. I haven't drawn the line in on my chart, but it's a massive level for the euro to take out. So just sell rallies and we'll look for them to fade. In terms of, just show you the weekly chart, this level down here, it's a big level. I think it will be targeted. We had a few attempts to take out the 114 level over here. Then we decisively do work our way to the upside, and I think we're going to go all the way back to the level. If we look at the, how would I put it, the fundamentals in Eurozone, the economy is not doing as well as the US at all. Okay, if we look at the central bank, the ECB, they've got stimulus. A lot of people think they're going to cut it back. They cannot cut it back. The poorer nations need that stimulus to support them, like Italy, Spain, and Greece. Eurozone is in terrible trouble, and a lot of people, talking up the zone like it's on the road to a broad-based recovery. It is not. Okay, so the economic backdrop, not good. Central bank are going to keep doing stimulus. We've got the ECB this week. I do not expect them to be anything other than cautious and dovish. So limited upside, plenty of downside in our view. Right, let's move to the next pair that I really like, which is going to be AUD USD. Right, in terms of AUD USD, rolls over nicely for us. Then we have a retracement, rolls over again, try and get back up. This spike tail fails. Now we're kind of coming back up again. This double trend line, I'm looking for it to hold the rally, and this 20-day moving average should provide resistance as well. Regular viewers will know we look to use it as an additional level of resistance in a strong downtrend or support in an uptrend. We did spike through it there, but we immediately failed back. If we come up through the 75 level, just sell back through it. Okay, in our view, if we were to have our stop taken out, we moved our stop to protect a decent profit, a couple hundred pips. We would wait to sell back through 75 or into the 76 level. 76 level, really big level. You saw the rejection there. I don't see it getting taken out. Of course, it could, but we'd sell off that level if we were taken out. Okay, I personally think we are going as low as 70. Okay, so basically another 500 pips to the downside. I'll just show you why I picked out that level. There is the 70 level. Okay, kind of here before the pandemic, big sell-off. Then we break up above it, come back, hold the 70 level, push off. The big fundamentals behind the chart point to a move back to the level. And I've said it in previous videos. If we look at the Aussie dollar, it's been falling when commodity prices have been really firm. That should be supporting the Aussie, okay, but it hasn't. And there's one commodity we're really interested in terms of the Aussie, which is iron ore. It's the biggest export, and I mean, it's just been a phenomenal run to the upside. I think it's the strongest commodity over the last year, but you're starting to see it kind of top out now, aren't you? If this gains traction to the downside, it's really going to weigh on the Aussie. I think we could get down to the 160 level. That would push the Aussie down to 70 in our view. Obviously, well, not obviously, but iron ore, biggest export, I think it's 45% of export revenue, might even be a little bit more now. Heavily dependent on China. China is slowing up. You're going to get Chinese data this week. Okay, I think it's going to show the economy losing traction. We can tell that already in terms of the way the Chinese authorities are reducing the amount of liquidity banks have to hold as reserves. They know the data is going to be bad. China's saying up, not good news for commodity prices generally, not good news for iron ore, not good news for the Aussie dollar. So, yeah, we could go a little bit higher, but yeah, rallies will be selling opportunities. If we don't rally, just sell weakness off the 75 level. Going to go to the Canadian dollar next. Canadian dollar's been a favourite of ours for a while. We've done plenty of videos on it. Down here was big monthly support. Speculators heavily short of the USD. We thought they'd get hit on stop. Nice run up there. Then we get stopped out. Good profit. Now we're back in. And I'm seeing a little bit of a retracement. You see our entry, 123. 30 up at the stop at 123.70. If we get stopped out, it's 40 pips. But hey, we'd be looking to rebuy. We just come through the 124 level. This 20-day moving average provided support there. I'm looking for the 20-day moving average to continue to provide support. So yeah, okay, we put the stop up, but we're stopped out. We'd come back in. We think we're going to 128 and then 130. What I like about this pair, I'm just going to show you it on the COT Net Traders positions. One of our favorite sentiment tool. On the COT Net Traders, it's always the foreign currency first, v the USD. So this is CAD USD. We obviously trade USD CAD. But it's this group here, large speculators. Despite the Canadian dollar falling hard, the USD going up from 120, look at the long position of the CAD, and they're basically short the USD, aren't they? They've hardly taken out any USD shorts. Commercial hedgers on the other side, who are the smart money, remain short the CAD and long the USD. So that, from me, points to more USD upside. For anyone unfamiliar with the COT Net Traders positions, if you want to learn how to use them, just check our video on our YouTube channel, which I think is called COT Net Traders Indicator. But more speculators to get taken out on stop. In terms of USD CAD, let me just bring up this chart here. I'm going for the big weekly level, which is up here, 130. So if we're correct, there's plenty more upside to come. Also, in terms of the Canadian dollar, crude oil is the main commodity to watch. And if we look at crude oil, look at it. This is a weekly chart. It's a massive rise to the upside, but the Canadian dollar has gained no real strength from it. Okay, so this still remains our favourite in the majors and has our biggest weighting. Okay, so yeah, it goes through 124, buy back through the level. If we don't, come in through 125 up to 128, then up to 130. Right, let's have a look at some more USD pairs. Go to USD CHF next. All right, USD CHF, I've said it previously, it's not the fastest moving pair, but it does tend to trend well long term. Got a nice long in from down here. Got stopped out. What I quite like about it is we're sitting above this double trend line, which is good support. Okay, good support levels. Just want to see us come through here. We'll go long again. For move to chart highs, longer term. This is long term, looking for monthly resistance at the par level. So yeah, for me, really good risk to reward in terms of getting back in on this one. Okay, next pair I want to go to is going to be USD CZK. I've mentioned before, like USD PLN. I'll come to that one next as well. If you're trading the euro and you're really bearish of the euro, look to trade the euro correlated currencies, because if the euro goes down hard, the correlated currencies very often go down harder. You do not get so much noise in these pairs, in my view. The correlated currencies, obviously Euro USD got a lot of algorithms or algorithmic trading systems trying to take out retail stops, etc. So always worth looking at. This one, we've had a smaller position in than USD PLN, but I'm going to equal the positions up. We pushed up quite nicely, just found support. Not much in the way of retracements. Haven't even been near the 20-day moving average yet. Just see if this double trend line holds and you can come off the level. Going for chart highs, and then off the top of my screen, the monthly resistance up at 23.50. Okay, so yeah, it's an uptrend. We're seeing a bit of a retracement. Look to buy strength. Okay, USD PLN, nice move up. We did get stopped out, come back in since through the 381 level. We haven't got much on the second trade yet at all, but again, got really good support here. Also, the 20-day moving average will snake its way up. That should provide support. So if we pull back, you can look to buy the pullback, or just buy through 385 up to chart highs, then up to 420, well off the top of my computer screen. So I like both of these euro proxies. There's others you can look at as well. USD NOK, USD SEK. These ones I just prefer, but you could consider the other ones as well. Any more USD pairs? Let's have a look at some emerging markets. USD MXN. This is a wild pair, but I personally think it's worth a small position. we're trying to break this 20-day moving average. You can see the rejections, these tails here, back to support. If that support level holds, we get through that 20-day moving average again, up to 2060, then up to 21. If you get broad-based USD strength, the emerging market should get hit hard. This is a volatile pair, so you don't need a big position. My last USD pair I want to look at is going to be the USD ZAR, South African Rand. Had a really good run in this one. Up here, we got stopped out, we come back in again, and we're just below our entry level. We just come right back to this 20-day moving average, okay? If we were to fall through it, buy back through the 20-day moving average. If we don't, come through these bodies here, I think 15 and up to chart highs. Again, you don't need a big position, okay? Very volatile. So the USD pairs I really like. Now let's go and take a look at some yen pairs. Right, so just before we go and take a look at the yen pairs are interesting, I've just brought up this spreadsheet, which is from our site, which is the COT Net Traders positions. Obviously, we just saw a chart, for example, of USD CAD, which came from COT base. This spreadsheet is just showing ratios, okay? So what the two main groups, the non-commercials or the large speculators, have in terms of longs over shorts or shorts over longs against the commercials or the hedgers, the smart money. Now, in terms of when you look at the CFTC net traders positions, you get no data for the crosses. So you can make it yourself by taking the two majors that make up the cross, and we express it as simple ratios. Okay, so what we're looking for is big divergence between the groups. The bigger the divergence over here, the better. You can see this one here, CAD JPY, really stands out. Anything around 10 or above 10 we're interested in. CAD JPY, the non-commercial speculators 6.6 to 1 in terms of their long positions over their shorts. So very, very bullish. Commercials on the other side, 4.4 to 1 in terms of their shorts over their long. So bearish, 11. It's a big divergence. So we're really interested in this one. We'll go to the chart in a moment. Euro JPY, 5.3 to 1 in terms of longs over shorts for the large speculators. Commercials 3.9 to 1 in terms of shorts over longs, near enough 10, so 9.2. They're the two that we really like, okay, in terms of the JPY. You might say CHF JPY is 9.8. It's a slower moving pair than CAD JPY. So we'll take CAD JPY. We're going to have Euro JPY. So let's go and take a look at the charts. And here is Euro JPY. And yeah, the ratio's been pretty wide for a good while, and that alerted us to our first trade, which was in there, got stopped out. We didn't get much out of that. Then we're short again, okay? So, yeah, a little bit of profit in this one. If we look at the way the price actions unfolded, the break of the 20, nearly reach it, down. Our stop is behind the 20-day moving average. So if you go above 131, you could sell back through the level, okay? If we don't get through 131, just sell weakness off the level, okay? We should get down to 128 and then 126 to take out the long speculative position. So it's, yeah, basically a downtrend in our view. We view the rally as a selling opportunity. Let's go to CAD JPY. This is obviously the biggest divergence. Did come down here, okay? Back to the 20. Look at, we struggle to get through it briefly there. We roll over, coming up to this double trend line here. I would, coming in fresh, sell through 88, or if we break this level, look to sell into the 89 level, okay, on weakness. Should get down to 86, then 84 to take out the speculators. The CAD, I didn't mention it earlier on, but we've got the Bank of Canada coming up this week as well. Bank of Canada, they're market generally expecting them to be hawkish. We think that's in the price. We think the CAD is going down. Now, in terms of the GBP, there's one cross I particularly like, which is going to be GBP CAD. And it's come quite nicely, okay? I'm looking for any dips back to this level here to be buying opportunities, or if we just get clear of this round number 173 here again, follow through to the upside. Stop back here at the moment. If we clear this high, stop would come in behind here. CAD just very, very overbought. So there's a few pairs for the up and coming week. Yeah, I think last few weeks we've had really decent trading conditions. I think in terms of the dollar, we may see, like I said, a little bit of a pullback, but that'll be a good opportunity to get into longs, and very bullish of the yen. I'm bullish of the pound against all three commodity currencies. You can take a look at the other two. This is the one I like the best. Right, that is the video for today. Thank you very much for watching it. Take care. Have a good day.